Folks, what's going on? The bear market is back on. No, I'm just kidding, but this is this happens pretty much every CPI number. Now we've got it doesn't really, we'll probably bounce a little bit at the last 2 months when we had the CPI numbers come out. We actually kind of drifted a little bit higher in the pre-market, and then the rug was pulled at the open. This one was a little bit different. This one was a little bit different because it broke off like right off the gate here. Man, oh man. Now look, the market's down 2%. Like, we can't come in hot and just chase this thing. We can't come in hot and just chase this thing down. So we'll have to see kind of like what happens at the open. But this is going to be an interesting day. Hold on, I'm trading some cryptos here. Let me cover some shit. There we go. Sorry. We're trading all morning. So a couple things. We got on the daily chart, we're running right into some resistance points. And that's going to be a little bit tricky. So like, we have two things on a technical level. We've got this, resistance spot. And then on the fundamental side, right, we have the CPI numbers come out. Now, you got a 2% gap down. Like, you can't really just come in hot and chase this thing. That's like a fool's gold. So what we really got to do is, let's see if the dip at the open gets bought up, and it very well can, because you lost a lot of range on the overall. If you're looking at some of the ATRs on these things, for example, AMD has a $6.80 ATR on a 10-day basis. You've already dropped like $6-7 at the open, so you can't really chase that thing down. What we'll have to do is see how the open handles. Now, just on the trading side alone, we've got to make kind of three different game plans. First game plan is like, okay, if we bounce at the open, what are the stocks that could get some gap fills or some bounces into EMAs, that we can play, that still like have some room to go. And then on the other side of things, we've got to make a short list. What are the stocks that are sitting like right at the resistance points that are the most extended the last, I would say, 5 to 10 days into the resistance points? And then your third bucket, so you should have buckets of trading when you're looking at your trades. Your third bucket would be, okay, like, what are earnings plays that are out right now? In general, this last couple of weeks has been really kind to companies that are reporting good to great earnings, and it's been demolishing companies that have been missing their earnings in general. But you have been seeing, like these kind of names like Bill and there's been follow through on some of the earnings gappers, and there are a few of those today. So you got three kind of buckets. What are the stocks that still got some room to go? Because the market inevitably probably bounce up a little bit, probably at the open, possibly. What's that resistance that we can fail? And then our earnings play. So let's take a look at the earnings plays. Let's see like what kind of stocks are really moving around this morning. Like this Twilio had earnings out. This is, hold on, let me clear my decks out here. Twilio had earnings out. You're kind of remounting over some MAs. Now this is like a little tricky trader, this stuff. It's got a monster spread on it, even though it's not a small cap company. It's a $35 billion company. It's got a spread on it. It does trade a little bit weird at times. You've got enough pre-market volume to kind of keep this. It trades a little bit like that bill, where you'll have a spread on it and you'll want to oversize. But if you just keep your size normal and you can catch it properly, you're going to be able to probably get a good shred on this one. It very well could fade off some of these too, but we'll have to be careful on this. Now, D-Dog in general, when it has earnings gappers out, so if you look in the past, like when it actually has gaps out, it's done pretty well. It has got a history of gapping up on earnings. It almost always gaps up on earnings. And so if you look at the days like it gaps up on earnings, is it a solid candle? Is it a red candle, filled candle, so on and so forth? But a lot of times you will see that there was good range on the earnings days, and you often did close near highs on some of these. This is probably something like, you're remounting over these MAs. It's already got 1 million shares of volume in the pre. Now, obviously, the market is turning into a giant rundy today, and we are at resistance. So these are going to be plays that you really have to, man, we have to let them settle. I wouldn't really chase an ORB on any of these. I would let these things kind of pull back and do what they need to do. There's been some good earnings plays out the last couple of days. So I think we got to pull in hot on this. We made money on this in the past, and then we made money on this past. I think we come in hot on this bad boy. So let's add this to the list with Twilio. You got MQ out. This is Marquetta. This is going to be too liquid, probably. I mean, it's got 400,000 shares in volume. I think we probably need a little bit more juice, like dollar juice on this. Mattel. Has anybody ever made money on the Mattel before? Donnie Hensley. I don't know. Like, do you want to be the guy known as, trading the Barbie doll stock? I mean, that's actually kind of cool. I take it back. Hey, these kind of, this just doesn't have enough ATR on it. I'd probably leave that thing alone. BTU, the black gold coal. What does that say about you when you trade the black gold? I'm from West Virginia in the coal country. Man, all right. And this you can probably play. The black gold, it's got a couple things going for it. You've got a chart breakout there. It looks like you've got an earnings pop. And then, of course, I'm sure commodities plays in general, right? Your oil, your uranium, your Uranus, all these kind of things. They all been popping. The BTU will give good range. Like, a lot of times if you have $1 ATR on a stock, but it's like 40, $50, that's not going to give you enough juice to like really come in hot on it. Yeah, if you've got $10 stock, it's got $1 ATR, that's enough to trade. I would actually add that to the list too. Disney, you fuck these guys, but whatever. This is probably going to have some range on it too. I mean, fucking after I had to sit through that fucking Boba Fett show just for that we should be shorting this thing. But like, this is like, if it clears out into kind of these 160s, this should be okay. Donnie Hensley, where you been? I get no phone calls, no love, no glove, no hello, nothing. I got nothing. For all I know, Connecticut is under nuclear attack, and I would not know because you have not been in contact. 160. If this thing starts to pull back and then makes the attack at 160, I'd add that. I won't trade this thing. It's a thick little bastard. There's thick stocks and then there's thick stocks. What I mean by that is like NVIDIA is like a thick stock, right? It's got a high float and tons of liquidity, but it moves around like really, really well. Disney is a grinder. Disney's a grinder. Like, what does it say about you when you trade that? I don't know. We got to have some rules here. Uber. Hey, so Lyft had their earnings, and they actually, when Lyft had their earnings yesterday, and it actually spiked down at the open. It ended up trending the whole damn day. You may get some action on Uber, but see, I don't like when they come in like real hot into like the MAs like this. You got a couple bucks upside. This is a thick bastard too. Like, it just doesn't give you that. I mean, you got to really massage the balls on a stock like that. And what I mean by that is like, you got to be like dipping in and out, because like you won't get like the big like dollar spikes on them like you would on another stock. Like, where like, for example, like if you take a setup like and it works, like it'll be like whoop, and you'll get like this kind of mega penis candle come out of it. You won't get that. What you end up doing is like you get these like grinders where they just kind of like, they go up, and you know what? Then you end up like sashaying in and out of this thing like a degenerate, and you're like, fuck, this thing is really choppy. And then by the end of the day, it's up like 15%. It's just been going up like tick by tick, penny by penny. And you're just fucking sitting there like, what the heck did I do on this thing? And before you know it, it's over. That's kind of how it was with me and a firm yesterday. there's some people that can do these kind of trade, but like, you know, when you just get these grind, but now this is like a big grinder, at least this had range on it. But like, that's like, you know, when they just start to grind like that, you're like, you know, you can sit there and be like, is it a failed breakout? Is this thing going down? What's happening? And then before you know it, like it's just ended up, you know, cruising up the whole day. So that's like usually not my particular flavor of type of stock. So I would probably stay away from the Uber. Beaky, you know, Beaky's got like a huge base over here, and it just does not seem to ever be able to clear it. Beaky, do you love me? Do you want me? Do you hold me? Beaky. Hey, so I believe this is a China-ish name. Chinese. I don't know if it's a Chinese company, but it's a China-ish name. I don't know what they're kind of like SE, right? SE is not a Chinese company, but it trades like one. It's like a China-ish. This is a China-ish company. It's got its earnings out. It's been in a big damn range for so long. But now, Beaky, do you love me? Do you want me? When it does go, like it will start to really, really cruise. Like it in the past, it's been able to move. There's two aspects. There's two problems with this bad boy. Is that number one, the liquidity is going to stink on this thing. And then there has been this monster lid on it for a long time. This is going to be one of those ones like, you know, I'll put that on the list. But like, I'm not that keen on it. Like, I don't know, because by the time it even gets in the resistance points, 10 more points, it'll be up 15, 16%. And then you'll need the juice to really break through there. In a different market, sure. In this market, I don't know. I wouldn't call that a priority. All right, now let's take a look. So let's talk about buckets 1 and 2. First of all, if we need the long stocks, we want to find stocks that still got some room to go, right? So I think like if the market starts to rebound and holds, you know, some of these names, like they really just started to move. They're not too far off their bottoms. So like if we need like a long, and that's like an if, right? We don't know. If we need a long, then like this UPST is probably still holding up okay. Like you can see like this Affirm, this just started making its move yesterday. Like yesterday was really like its first day where it started to get cooking. So like that's probably still got some room. You don't got any supply till you're a little bit overhead. So like UPST, Roblox also, like yesterday was really like, you could see, even though the market's been bouncing, you weren't getting like that big of days. Yesterday was like your first real, right? Like actual, like, hey, fuck, this thing's got a little bit of range. This thing's got a little bit of range to it. This is probably something too. I think, you know, if we need longs, this is also, so we go UPST, we go Roblox, we go Affirm, and then, you know, like SQ had a good, solid, God-fearing Christian range up here. Like this has probably got a little bit of juice on it. We can go with those particular names. Now on the short side, so when you think about the short side, like if the market gets dusted off today and it's already down 2%, so you can't chase it into the hole, right? You can't chase this thing into the hole. But like if we bounce up at the open, right, we fill, say, half the gap, pop into some moving averages, something like that, your VWAP, whatever, you know, you particularly use. But like you start to roll over, then we want to be looking at setups that are like kind of nuzzled right into resistance, right? So if you think about like what's a nuzzler, well, this, you know, I would say ZS is a nuzzler, right? Like you were nuzzled right up into this resistance spot, right? And you're already getting dusted off. So I'd call that a little bit of a nuzzler. You know, I would go with TTD as a nuzzler, like, right, you go whoop, right into the MAs. And you're also looking for things that are like right extended off the bottom in terms of the actual movement of it. So I call TTD a nuzzler. TTD, ZS are nuzzlers. AMD is a double nuzzler. Like you really, I mean, this thing was at $98, right? So you're going to 134. It's a thick stock, but this is a nuzzler, like right up under that 50-day moving average. So this is a good old-fashioned nuzzler there too. Man, I did a good short on this in the pre too. I didn't think it's going to go down this much. This is a nuzzler too. So if this thing pops up at the open, I think that one's a good nuzzler. And NVIDIA is not there as much. So I would actually go with AMD is a better nuzzler than NVIDIA, but they're going to move in. They're going to move in like similar manners for the most part. You know, you can see like all these semiconductors really had like good bounce, but AMD is the cleanest out of the group. Like these are all like in different kinds of locations. So I think, you know, when you really look at this, you want a nice nuzzler to kind of base your risk off of. That's going to give you a good solid range. If you need something a little bit slower, that's like still can, you don't have to take a little bit of size, but something that's a little bit more slower, a little bit less shaky. This Ford is a breakdown pullback. So you've got, you know, this thing's broke down. And then see how like you're popping right back into the breakdown spot here. You also got your 9 EMA running right up on it. And if you really look like, right, whenever you see like this, like this nub, like an FU on your chart, that's usually a sign of lower prices to come. So like if you need something a little bit slower, like you can definitely roll with that. I think everything when the market gets volatile, so when volatility contracts, like yesterday, when you just get a trend day and it's non-volatile, like you're getting what we call a gap and go or a gap and grinder, those are stock picker markets, meaning like, okay, like every stock is going up yesterday, but they're going up slowly. So you want to be able to find the ones that will go up the most, right? With the most range. And so, right, you want to pick the ones with the range breaks and, you know, kind of all that. But like yesterday, right, like everything is just grinding higher. It was a low volatility, right, type of day because you're just getting a gap and grind kind of action on a majority of like, right, of stuff that you might be watching. Like, you know, you're just kind of grinding higher. So that's a low volatility day. That's a stock picker's day. You want to pick the best setups and then, right, the themes, and then those end up going up the most. And then you'll have a handful of names that are doing dip. When the market is down 2% like this, right, the volatility will start to increase. Everything will just move in unison with the indexes. They'll all move around the same, like pretty much everything on your watch list. If the market's down 2%, by the end of the day, everything on your watch list will all dump down between 6 to 10%, give or take, right? So that's something to just be mindful of. So today, like you don't have to have a huge list. They're all, if the market's going to be volatile today, they will all move around in unison, in concert. It'll be a dance, and it's not going to really matter which one you choose. So then what happens is you want to choose safety, right? So if everything is going to move around the same, I want to have the one with the most liquidity. I want to have the one that's just got range that I can get in and out of. So like, you know, for example, like if, you know, you've got a stock, if two stocks look the same and the market is getting its salad toss, then you want to pick the one with the most liquidity and the less spread, because that's going to make you make the least amount of mistakes. You know, when the market gets wild and you start trading stocks with big spreads on them and stuff like that, they always corner you into making mistakes. You know, in general, like if you're trading something with like a 50, 60 cent spread, like I do this all the time. Like, you know, we trade this SC a lot, and the spread on this is like 50 cents sometimes at the open. And my natural inclination is to like hammer this thing with like 2,000 shares, right? Well, if you do that improperly, you're going to lose $1,000 right off the bat just on the spread. And I'm an Indian person, right? So if I see a minus $1,000 anywhere, I'm like, oh, fuck, man, shit. This is no good. And so then you start making mistakes. So it's easier to just go in with stocks that have tight spread. If you don't trade spread well and you look for the liquidity, everything's going to move around the same today. You know, that's just going to be the nature of, you know, the market. Dance, you know, you don't really know when it's going to be a gap and grind day. The key is like when you're looking at the indexes, like if you gap up at some point, if you don't fade out the gap and then you start to take out, right, its range and it just starts to build, then like you'll have an idea, like when it takes out the opening range at some point in the first hour and it just holds without any shakeouts, and usually you get the gap and grind day. You don't know for sure, but that's usually, you know, like historically, like, you know, the last couple months, like when you gap up this much, you come back and fill a big chunk of the, you know, the gap. So when it doesn't do that, it's like just holding in the MAs, trading like a stock. Usually you get a gap and grind day. Now that always looks easier in hindsight, but let's just let's get this thing going. So we have Romo in the video. Dun, 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 dun. 3 buckets. Remember, 3 buckets. You got your earnings plays, you got your nuzzlers, and then you've got your stocks that still have room to go. We got to be prepared for everything and do not chase the market down into the short, into the hole. But I would be very wary, like just buying the dip blindly, thinking like, hey, the market's been strong, I'm gonna buy the dip because of that. That can get your, that can get you dusted to. You need really good solid setups to get into this. And remember, this market's like just sitting right at the resistance spot. Anyways, my gut feeling today, first bounce, I'm taking this thing down. Let's get our 6 windows layout set up. We'll be trading. We're gonna be trading today, guys. So hopefully we'll make our money by lunch and then we'll get out of here. All right. Peace. I'll be in our chat room doing what I do, which is the do.